Before investing in any company, we must analyze that company, and to do analysis of the company, it is very important to understand the financial statement of the company. There are mainly three types of financial statement which are called balance sheet, income statement and cash flow statement. And now in this video we will learn about the balance sheet. We will know what is the balance sheet, why it is called balance sheet, and what information it gives about the company. Also, end of the video, one small task on the basis of this video so that you can understand the content of the video more thoroughly. Therefore, you must watch this entire video carefully. Friends, a balance sheet is a financial statement that every company makes when the financial year ends, and companies shows it mainly in their annual balance sheet. A balance sheet information about the three things of the company. First thing is the asset, that is what are the things of the economic value in the company has. Second one is the liabilities, that is how the company has borrowed. And the third is the shareholders equity, that is how the money of the other shareholders, that is how the money of the shareholders is currently invested in the company. We also call shareholders equity as a owner's equity, or just equity, or net worth, or book value of the company. In this way, a balance sheet tells us about the asset, liabilities, and shareholders' equity of the company at the end of the financial year. Friends, the first thing that we have to understand is why balance sheet is called a balance sheet. What exactly the balance sheet meaning of the word here? Friends, a balance sheet is divided into two parts. In one part we show assets, and in second part we show equity and the liability, and the value of these two parts is always equal. That means both assets of the company and equity plus liability of the company are always in the balance sheet, and that's why a balance sheet is called the balance sheet. If we write the same thing in the equation, we will say asset equal to equity plus liabilities, and the equation is called the balance sheet equation. Friends, a balance sheet is made in two ways. The first is the horizontal balance sheet, and second one the vertical balance sheet. In horizontal balance sheet, the balance sheet is divided into horizontally into two parts, which has assets on the left side and the right liability on the right side, both equity and liability, where the vertical balance sheet is divided vertically into two parts. The first part generally consists the asset, and below that the second part both equity and the liability. And most of all the companies make vertical balance sheet to understand the entire three sides: asset, liability and equity. Friends, on the asset side of the balance sheet, company shows their total assets by dividing into two parts. First one is the called current assets, and the second one is called non-current asset or long-term assets. Current assets include the asset of the company will use or will convert into cash within a year, such as cash and cash equivalent, short-term investments, inventory, current receivables, etc. Whereas all those assets in non-current assets which the company will continue to use more than a year, such as land, building, factories, equipments, long-term investment, etc. By adding both these types of assets, company shows their total assets. Friends, on the equity and liability side of the balance sheet, company generally shows the liability and then the equity. Company divides their total liability into two parts like assets. The first one is the current liabilities, and second is the non-current liabilities or long-term liabilities. Current liabilities include all liabilities of the company that has to pay within a year, such as short-term loans, account payable, etc. Whereas non-current liabilities includes all the liabilities that company has to repay after 1 year, such as long-term loans. And then by adding both these type of liabilities, the company shows the total liabilities. Friends, after liabilities, company shows the equity on equity and liability side, which consist mainly the equity share capital, other equity and retained earnings. And by adding of all these three, company shows the total equity. After this, company shows total equity and liability by adding total liability and total equity, which is always equal to the total assets, and by which the balance sheet remains balanced.